I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday, so let's do a kind of the ones that I enjoy doing the most. Let's do a quick little motivation blog, help you guys stay the course, positive affirmation that I always like to pound home. I like to take it in from other sources too, from some of the blogs I read on a daily basis, newsletters from some of my investment friends in New York, and I like the Tim Ferriss podcast. I'm always listening to that. You always got to have this positive stuff in your psyche here to keep positive, stay the course, because it's a journey here. Financial success, buying your first home, buying an investment unit, saving for retirement. This is a 20, 30, 40-year journey. It's not going to come overnight. There's no shortcuts to this, but enjoy the journey. Enjoy it. Set a plan, stay the course, and I will guarantee if you follow some of the rules that I've been laying down here on my blog, or if you bought my book, I will guarantee you will have massive amounts of success when you get to my age. You don't notice it much in the first 10, 15 years. I didn't. It wasn't until I got into my late 30s, early 40s that I really, kind of arrived. I thought, okay, now I've got certain number of properties, I've got income coming in, my stock portfolio was at a certain level where it was producing $30,000, $40,000, $50,000 a year passively in dividends. It's like a weight off your shoulder, but it's going to be 15 years before you start to see some of those results. Stay with the program. But I've often said here over the last few years, especially with everything that's coming out of COVID here, I've been saying for years here with social media and all the dumb stuff I see on Twitter, these amateur economists, these doomsdayers, these, paid by the article writers. I don't even know if I would call them writers in some of these financial publications now. Most of them are negative. Most of them have no clue what they're talking about. They have no transparency. Most of them are not successful people themselves. These reporters that are writing for Bloomberg and a lot of this stuff you see in the Vancouver Sun and the province, and I saw one in the province, I'm not even going to give them credit for it. It was so pathetic. These guys are making nothing. They're peanuts. They're financially uneducated in just about every way, yet they're doling out these articles that people, I think, some people are probably taking in and taking advice from. You've got to tune it out. The bar, as I've been saying for many years now, with all this access to statistics and social media, it has lowered the bar. It's making it easier, in my opinion, way easier for the people that really want to work, focus, stay disciplined, get ahead, rise above. It's making it easier for you guys. It's certainly made it a lot easier for me these last 5 or 6 years. I mean, as I speak, my stock portfolio is at all-time highs again. And I picked up some tremendous bargains back in March, April, even early May that now are just like I stole them. There was an article, a couple of them I just sent to my Twitter feed. If you're not following me on Twitter, have a look. There was an article talking about how this COVID has widened that wealth gap. The haves are gotten a lot stronger. The have-nots have fallen further behind, and they absolutely have. Many people were predicting this, and this is exactly what's happened. People have taken advantage of this COVID thing and invested their money, bought shares and stocks at fire sale prices. I blogged about back in late March a couple of condos I saw that got sold that were absolutely bargains. These people that sold these, I'm sure, are kicking themselves in the head for letting them go at that price. These are now selling. That one I talked about in Olympic Village, I just saw one sold at $65,000, above what this previous one had sold in March. They gave it away. They panicked. They listened to too much mainstream media that we're all going to die. The bar is set low here. Some of the things that I tell people, how to rise above. A, stick with a program. Start working, moving up the pay scale. Get a side hustle. Save 20% of what you earn. Get into your principal residence sooner rather than later. So if you're renting right now, save for the down payment on your principal residence. Keep your expenses low. If you've got credit card debt or anything like that, you've got to clear that stuff off before you start saving for a house at 20% interest rates. Tune out a lot of the negative people, and that's tough to do these days because 80-90% of the stuff I see out there is negative stuff. It's doom and gloom because that's what gets clicks and that's what draws people to these articles. The stuff that I preach, I had people say, I can't believe you've only got 5,000 or 6,000, 5,000 subscribers. Well, the reason is that, I preach the real stuff here. It's not a get quick rich thing, and it's not doom and gloom, which makes people feel, better about themselves. They feel sorry for themselves, and they're attracted to these negative people because it makes them feel better. I don't dole that out. I deal out the tough love here, as you guys know. It's not going to be easy, but it can be done. So surround yourself with people that have transparency, positive people. Get rid of all these negative people that are out there. That's going to go a huge way to helping you. Buy and hold, which I've been preaching forever. Get into your principal residence, keep it for 20 or 30 years. It should be a 20 or 30 year need anyways. Buy low-cost ETFs for your retirement, Vanguard VIG, the VIG, the S&P 500, the TSX 60. You're paying nothing on it for management expense ratio, and just keep it. And later on, if you want to buy some individual stock, go ahead. But make sure it's the right stuff. I talk about it in my book. I've done lots of blogs on the type of companies I like to own and hold. The final thing is, ignore a lot of the volatility. It's not going to be a smooth ride up. Not to brag here, but if you've read my book, the losses I took back in 08, 09. I also took some huge losses here in March and April. But it was on paper. It didn't mean anything. I was actually buying. You have to get comfortable with that volatility. Whether it's in real estate or the stock market, it's not going to go up in a straight line. You're going to have years where your stock portfolio and your real estate portfolio is worth less than what it was the year prior. It's par for the course. I've got a pretty large stock portfolio now. It's taken me, 30 years to build this thing up from nothing. You can do it too. But when you get to my stage, it's not uncommon for me to have $30,000, $40,000, $50,000 daily swings in my portfolio. I've got a good sized portfolio now, of course. Geez, 75% of my holdings are in US equities. So just the exchange rate, I can have $10,000, $15,000 up and down days just based off the currency exchange between Canadian and US dollar. So if that's going to make you queasy, well, that's the sign of success. That's what you're going to have to get comfortable with as you move up the ladder here. Having $30,000, $40,000 up days and down days. $50,000. I had easily I had a couple of days back in March where my portfolio was down $100K. I could have bought a brand new Porsche for what I was down. But it doesn't mean anything because I look at my portfolio on what it's generating for me as far as dividend income. It'll help you stay the course. But positive attitude is the big thing. Some of these guys, I tell you, I know I harp on it probably too much, and I know all the people that are subscribed to me are on board here. Positive, can do, you gotta be an optimist in life. Life's not perfect. But it amazes me some of the followers that some of these people have got, these depressed doom and gloomers that have been wrong for so long. They just don't understand how life works. It's not going to be perfect. There's always going to be dark clouds. Always. I have no idea what the Vancouver market's going to do later this fall. Maybe we get a 10% correction. I don't know. But I don't care. I'm not selling any of my properties. And hey, what I tell people too with the stock market, if you like a stock at $100 a share today and you're buying it, and it goes down 10% this winter to 90, then you should like it even better. I do. I actually like it even better at $90 because I'm going to buy it and hold it for 10 or 15 or 20 years and collect the dividends on it while I wait. So stay the course. The bar is low. There is a tremendous amount of money and success and people rising out of this COVID. But you can stay at home and feel sorry for yourself, or you can look at ways of improving yourself and moving ahead. And that's what life is all about. Looking for opportunities and keep moving ahead. There's going to be good days and bad days. There is in my business all the time. Stay the course, stay positive, look for opportunities, surround yourself with positive people that have got a track record of success. Because there's people out there that have got some pretty good followings, and I can tell you right now, I'm not going to name names, they do not have any success. You don't want to be in their realm. You're just wasting valuable time listening to this stuff, the negative stuff. Take control, move forward. Remember, it's a 20, 30, 40-year game plan here. No shortcuts. I'm Owen Bigland. Thanks for watching. I'll see you next week.